Assalamualaikum and good morning. Apex Holding Berhad is a diversified Malaysian company operating in three divisions, namely plantation, real estate and property development, and food manufacturing.
The first scenario is under plantation division for Palm Good Berhad. In this case, the key distinction is that all palm trees are bearer plants, while fresh fruit bunches are biological assets. The oil palm trees are classified under MFRS 116 because they are used to produce agricultural produce over many years and are not intended for sale themselves. Therefore, they are measured at cost less accumulated depreciation and impairment loss. In contrast, the fresh fruit bunches are classified under MFRS 141 because they are agricultural produce that will be harvested and sold. As such, they are measured at fair value less cost to sell. This distinction is important because the trees and the fresh fruit bunches serve different economic purposes. Applying different measurement bases ensures that the company's assets are valued appropriately and that its financial position is faithfully represented.
Next, we evaluate the CFO valuation of immature FFB. By using harvested price of 650 ringgit per tons, this approach fails to achieve faithful representations. First, it violates three qualitative characteristics: neutrality, and it was biased to inflate assets for investors; completeness, by omitting future costs and risks; and it is not free from errors because it applies a finished product price to a developing asset. Regarding substance versus form, where the CFO relies on the form of a ready-to-sell market price, the academic substance is that these are work-in-progress assets still on the tree, requiring further cultivation costs and facing biological transformation uncertainties. Finally, what would a more faithful approach look like? According to MFRS 141, a more faithful valuation would use the present value of expected net cash flow. This approach accounts for remaining costs and biological risks to accurately reflect the assets through current conditions. In short, the CFO valued the future at today's price. To be faithful, we must use the present value method.
Following the CFO's instructions would breach three core ethical principles. First, integrity. By applying the IN 650 to immature FFB without adjustments produces misleading figures. Second, objectivity is compromised because commercial pressure is prioritized over professional judgments and evidence. Third, professional competence and due care as under MFRS 141 requires fair value to reflect the asset's current state, meaning we must adjust for biological risk, time to maturity, and yield uncertainty. Thank you. Step 1. Document analysis and findings 1. By preparing a written report on why the figure does not comply with MFRS 141. Second, raise the matter with the CFO by requesting a formal meeting or sending the prepared report. Third, enforce the correction and create company policies to ensure a similar incident does not happen in the future, and if the problem is still unsolved, then you should whistleblow. As accountants, we serve the public, not just our employer as under the ASR code, and the investor rely entirely on these figures to make their decisions. Overstating the biological asset value by ignoring maturity stages misleads them directly and risks breaching both the Company Act 2016 and the Capital Markets and Services Act 2007.
For question A, based on the relevant accounting standards, property 1 is a mixed-use property. The 7 floors rented to the tenants are classified as investment property under MFRS 140 because they have generated rental income, while the remaining 3 floors used as the company's headquarters are classified as property, plant and equipment under MFRS 116 because they are owner-occupied. For property 2, it is classified as investment property under MFRS 140 because the land is held for an undetermined future use. Property 3 is classified as inventory under MFRS 102 because it is being developed for sale in the ordinary course of business. For question B, property 1's investment property portion is initially measured at cost and subsequently measured using either fair value model or cost model under MFRS 140. The owner-occupied portion follow MFRS 116 and may use the cost model or revaluation model. For property 2, it is initially measured at cost and subsequently measured using either fair value model or cost model under MFRS 140. Property 3 is measured under MFRS 102 at the lower of cost and net realizable value. Therefore, the CFO's proposal to classify all properties as investment properties and apply the fair value model is inappropriate because it ignores the actual purpose of each asset. This will overstate asset and profit and violate the principle of faithful representation.
Assalamualaikum and good morning everyone. My name is Kistina Naili binti Shahru Ismail, matrix number 309479. So for my part, I will discuss whether Fresh Taste Food Manufacturing Berhad should recognize provisions in accordance with MFRS 137, provisions, contingent liabilities and contingent assets. Firstly, the company should recognize a provision for the product recall cost. This is because the product recall creates a present obligation. The outflow of economic resources is probable since management expects approximately 70% of the affected products to be returned, and the amount can be estimated reliably. In addition, MFRS 137 requires provision to be measured using the best estimate of the expenditure needed to settle the obligation. Since 1 million ringgit is considered the most likely amount, Fresh Taste should recognize a provision of 1 million ringgit in its financial statements. However, the company should not recognize a provision for the consumer lawsuit because the legal advisor estimates only a 30% chance of losing the case. Therefore, the outflow of economic resources is not probable, and the lawsuit should instead be disclosed as a contingent liability. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nuri Nabila binti Qasim with metric number 309480. Next, I will explain how uncertainty influences the recognition decision under MFRS 137. Under MFRS 137, uncertainty determines whether a liability should be recognized as a provision or only disclosed as a contingent liability. For the product recall cost, although the exact amount is uncertain, management can estimate it reliably at 1 million ringgit, and the outflow of resource is considered probable. Therefore, Fresh Taste Food Manufacturing Berhad should recognize a provision. However, for the consumer lawsuit, the company's legal advisor believes there is only a 30% chance of losing the case. Since the outflow of economic benefit is not probable, the company should not recognize a provision. Instead, it should disclose the lawsuit as a contingent liability in the notes to the financial statement. In conclusion, under MFRS 137, if an obligation is probable and can be estimated reliably, a provision is recognized. If the outflow is not probable, it is only disclosed as a contingent liability. This ensures that the financial statement provides a fair and reliable presentation of the company financial position. That's all from me. Thank you.